All right, and we're live, guys. Thank you so much for joining me for another episode of Breaking Bitcoin Market Update. Hopefully you guys are doing fantastic wherever you're tuning in from. Let me know if the background music is too high. I can adjust it if necessary. I'm going to play around with a few things. I got some copyright-free music, hopefully, that's not going to get me in too much trouble with Scott. We'll see how as we go. Obviously, exciting day in the market, guys. Today is, of course, March the 21st, guys. 10 days until a very special day for me. You guys will be happy to know, hopefully. Well, I'm happy to know. We fired the I don't know, the $2,000 to $3,000 laser for the computer upgrade last night. So hopefully that will be coming in pretty soon. I'll be going to pick that up myself personally once it's all constructed by Scott's master hands, courtesy of Revival Tech Repair. And everything should be really sweet and seamless. So really looking forward to that, guys. We're going to be doing, hopefully that will really improve the quality of the stream. As you guys know, I apologize for yesterday's stream. There were a lot of be right back screens. I had the ISP supervisors and everybody tier 3 techs down here really going over everything that they possibly could, which was a little bit above their pay grade, I think. But of course, we're doing our best that we can to possibly provide the best show that we can. So thanks, guys, for joining us. If you guys have any questions, throw them in the comment section, guys, and make sure to smash up ye old likes. We always appreciate that. All right, let's get right into it, guys. Pretty exciting day in the marketplace. We've got a lot to go over today. We're going to look at total market cap. We're obviously going to break down Bitcoin and Ethereum technical analysis, give you guys an update on my positions. We're going to get to the question of the day today, because my favorite thing is to talk about trader psychology and discipline and proper trade strategy, which is, I think, the true purpose that you guys find in the show. For those of you that have been with us for a while, and for those of you that are starting to take the tools and methods that we're learning together, that I'm patiently trying to explain to everybody. I know it from the DMs that I get. I know it from the messages in the members group. I know it from the community that we're building. I know that people are actually taking all the garbage and nonsense that they were getting in their head from how to trade, from sources like Investopedia and all this nonsense out there that's going to teach you how to trade in a particular way or a particular strategy, to make sure that you're using the RSI, to make sure that you're using all this and that hopefully you guys, and I know that you guys are taking the information that we're providing and learning how to reduce your risk, learning how to trade profitably, learning how to properly position size, and learning ideally that money management is the most important thing when we're approaching this space. So we're going to talk about that. We're going to talk about what is the appropriate trade length. We're going to respond to Ed McCracken's question. We're going to talk about Binance Launchpad psychology, and we got some other stuff planned for you guys too, man. Sponsored by Lens. All right, let's see here. Okay, some mixed opinions on the music, but overall, not the best results. I'll tell you what, I'll turn it down. The reason I got the music on, it helps me concentrate. So, all right, guys, let's get right into it. Let's start with general market outlook, and let's go over here to the charts, guys. We're going to start with Bitcoin. Maybe if I turn the music down. All right, so let's see here. Okay, obviously having a very volatile movement down in the not the early morning hours, but moving into the afternoon here on the 21st. Don't like me. Everybody logged in and said, no, cut Justin's music off. We don't like it. All right, well, there goes the music. Anyways, guys. All right, obviously having a fairly volatile movement down here, moving into the afternoon, pretty much directly right before the 8-hour candle close, which is what I like to do, guys. I got some questions on why do I trade off the 8-hour candles? Is it related to funding? That is a nice benefit that you can get from the 8-hour candle. So let me give you guys first, just briefly, kind of an introduction on why I like to trade the 8-hour candles. I find that it is a very nice balance between the daily candle, which lags with too much information, but is good for putting on positional trades, and then anything lower than that, the 4-hour, the 1 hour, the 15-minute, the 30-minute, obviously, which is going to contain a lot of noise. So those time frames are fine to trade with a certain strategy that is congruent to those time frames. But when you're looking to ideally put on positions or have the correct directional bias that I like to have, because I prefer to take longer-term swing positions lasting 4 to 6 days. Again, time duration doesn't matter. When I get an entry signal with my strategy, I go and I manage my risk pursuant to my money management strategy. And then I take profit at my predetermined take profit level, and I let the rest of my position ride until I get an exit signal in the opposite direction, until I see clear signs of trend reversal, or alternatively, generally if I'm trading more volatile altcoins, depending on where ATR is sitting, because as you guys do know, average true range determines and dominates much of my money management strategy. Then when I'm trading highly volatile alts, I will generally have predetermined take profit levels at levels of ATR. But however, the more dominant structure is entering when my strategy and my indications tell me to enter into a position, managing my risk appropriately pursuant to my strategy, and then scaling out, taking profit off the table at a predetermined portion so that the trade is officially a winner, and then letting the rest of my profits run as long as they can possibly run. So the reason that I like to trade the 8-hour candle is because I find that it filters out noise the best and has that nice balance between noise filtration and time delay, because the daily chart can lag quite a bit when we're talking about cryptocurrency, something that moves so quickly. So something that I like to do is the 8-hour candle closes for me at 11, 7, and 3. So 11 o'clock in the morning, 7 o'clock in the evening, and 3 o'clock the following morning. So what I like to do is I primarily am going to trade off the 11 and the 7, and I like to look at my trades about 20 to 30 minutes before the 8-hour candle closes, because at that point in time, I have all the information pretty much that I'm going to have from the candle close. They're different. They're about an hour past the volatility of the daily candle close. So for example, my time, for example, the daily candle closes at 6 p.m. The 8-hour candle is going to close at 7 p.m. So there's often a lot of volatility leading directly up to and directly after the daily candle close, and often it's often just a lot of noise. So having that 8-hour candle close an hour after that helps me filter out the noise that is just the volatility of directly before, directly after the daily candle close, and allows me to make a decision on which trade I want to execute prior to the noise volatility of the funding rate, typically if I'm trading the perpetual swap contracts. Today I look like Picard, Star Trek now. Thanks, man. Live long and prosper, guys. All right, so anyways, let's get into this. My overall outlook on the market is still bearish, guys. As we've been talking about frequently for a long time, we are in the vicinity of resistance, and although I would like nothing more than to get my moon boots up off the wall and get them, they're still polished, they're still being kept very nicely, and I'm still very much patiently waiting. And again, guys, I am obviously a long-term believer in Bitcoin. I think that it has the power to change the world, and honestly, and obviously, I do feel that it will reclaim its previous value eventually. Actually, probably not, probably faster than many individuals think. I think I'm not on the. As a trader, I don't like making these gypsy ball. This, of course, will happen at this point in time on this date. If you knew this person, this will, of course, happen. That stuff's nonsense and garbage. And that stuff is for CNBC and Bloomberg, if you guys want to keep tuned to those channels. And to other news channels out there that don't really do anything except like read you headlines. I've never really understood the point of that. Now, don't get me wrong. I'm very supportive and I understand the hustle and the grind of being a YouTube streamer or being an entrepreneur or being somebody that makes their own money their own way. I know how difficult the grind can be for being a YouTube personality or streamer or whatever it is. And so anybody that's out there hustling and grinding like that, I got your back. But we do have to make a determination between channels that just read you news headlines and then there's channels out there that give you genuine, unique, original information. And those are the channels I find that I support, that I enjoy watching when I get the time to watch YouTube channels anymore. Anyways, so moving into very bearish territory, obviously with the close of the last 8-hour candle, if we zoom in here quite nicely, we do actually see a very nice grab for liquidity or supply and demand run above the previous high of 40.60 here on the tether chart. And we can see that same price action occurring here on the BitMEX chart as well. Going to the 8-hour candle, we see that same supply and demand run above the previous high of 40.40. All right, so price moving up, actually to a mental stop loss area for a short had I been grabbing liquidity. Now, I did not do that because of the time that I logged in to look at my trade. However, I did see some indications to make me go ahead and enter into a momentum short. So that is where I sit now. I'm short from about 40.15. Now, after putting in this fairly clear and defined liquidity grab to the upside, again, we have to wait for lower time. Or you can see this if you wait for lower time frame candles to close, and that's how you are going to be able to catch tops and bottoms more efficiently. But just keep in mind, the lower, it's always kind of one of those hindsight things, because everybody that's watching this on like the 15-minute or the 30-minute chart or the hourly chart, for example, I'll tell you what, man, I'll just turn the music off. Hey, what's going on, Sean? Good to see you, man. Hello. How is Ireland doing today? Feeling warm, man? It's not too bad out here, man. It's nice and springy, dude. I feel like the Ides of March are coming, man. So, remember that the lower time frames that you guys zoom down on to catch movements like this. So like, let's look at BitMEX here, for example. Let's see if we would have been able to catch the SFP on the 3 hour. No, it happened too fast. Were we able to catch it on the 1 hour? The 1 hour could have caught it for you, okay? Because again, you see that same thing. You see that inverted hammer candle on high volume and high volatility right there, moving above previous swing highs and then closing below them. That is a classic grab for liquidity pattern, much different from this one. So this one could have faked you out again. Would not have been a bad entry into a short, at least a scalp to the downside here. As you can see, you could have gotten about 0.5% off of that, because you are going above previous highs, and then you consolidate, and then you get real punishment of the shorts right here. Moving over to tensor charts, we can actually see fresh. Yeah, moving over to who do you work for? Moving over to tensor charts here and zooming back here a little bit to that movement, we can actually see, yes, the longs getting the shorts getting quite punished here. Let's see how many liquidations: 1.9 million, 763,000, so about 2.6 million liquidations. Honestly, not that massively impressive. We have a lot of long liquidations coming in here as well. About 1.1 million long liquidations as well. Sorry, I was looking at the wrong area. I apologize. Combine those short liquidations with an additional 1.4 million and 2.7 million in liquidations. All right, so now we're in the range of above 4. Actually, about 6 million contracts when we factor in that previous information, which had just occurred on the previous evening as well. Coming down, a lot of longs liquidated right now, and now we see ourselves moving to a period of sideways consolidation on the lower time frames. And this is something that we were speculating about, and that I am still speculating about in the members group. Let me get into that after I finish kind of just the overall look of how the chart looks at this point in time. Shorts get punished having their stop loss in a, it's hard to determine. Anybody going short in this range would have again naturally had their stop loss in a range above here. This is an area where, you're in the right position trying to short the market, but you're waiting for that SFP, not SFP, excuse me. That is the wrong terminology. I want to be clear about that. Supply and demand run. I give you guys credit for anybody that was in a short from this period and they got kicked out. Again, I'm sorry if that happened to you. But when you see a candle like this, again, we're on the 1 hour chart here. This is a fake out candle. I mean, because this is not a bad candle to be entering into a short on, because this is one of those candles kind of indecisive. Okay, you do see that there's a fairly long wick. You are going a little bit above previous highs and closing below, and then you enter into a period of consolidation. So you're thinking to yourself, oh, this is distribution. But generally, and this is a note, doesn't always happen, but when you have what you think is an SFP, and then you enter into liquidity grab, and then enter into a period of consolidation, you're generally going to get hunted again. It's a trap. So I would have been out of the short at that point in time, because the fact that you've already had what you think was a supply and demand run, and you didn't get that highly volatile or pronounced movement from it, again, unless you took profit on a very lower time frame for a scalp off of this bearish candle right here, then there's a very good probability that you're just going to get hunted again, because there has not been enough liquidations, there hasn't been enough liquidity tapped into to significantly move the market. And that's exactly what happened. We did have another violent liquidity run, and the market did move down. Now, when we're looking at what price did down here, what it just did following that, again, we have that same thing. We have an area of equidistant lows. We have clear support right here delineated. We have, actually this nice, just really this whole area right here. Pick a place, pick any place where a retail trader would have placed their stop loss below any one of these lows. They've all been hunted. So kind of the same idea here. I know a lot of people are looking to aggressively go long on this and considering this a buy the dip opportunity, and it could very well turn into that thing. Personally, I feel that we have more continuation of this. I've been waiting for this for a while. Doesn't mean that this is going to be the breakdown at 3,600. I do think this is the beginning of it, however. Because again, the same logic applies. When you see what you think is that supply and demand run right there on that candle, we just talked about this. When you get faked out by a candle that you think is going to be the liquidity grab, and now we have had enough liquidations and are going to move in the opposite direction. If you are potentially considering that that is happening here, keep in mind that when that happens, and then we enter into a period of consolidation, typically you're going to get hunted again if your thesis is correct that we are going to move in the opposite direction. I think that we're not going to move in the opposite direction. I mean, obviously, I would not be surprised to see us float up here a little bit. That's just natural after such a volatile movement. But I think it likely gets sold into and we have continuation to the downside. And I probably think that we probably get another hunt before this is all said and done. Again, we've seen this several times. Let's go back. If we go back and look at... let's find a good example of this. Yeah, this would be a good example. This is a more violent maneuver. Obviously, the last time that we rejected very strongly from the recent top, we did come down here and moved into sideways consolidation for about an hour, and then had another hunt to the downside, and then actually had a third hunt to the downside, and then we finally did end up moving up. We cleared out enough liquidity. And then both the longs and the shorts were punished before we moved into more sideways consolidation. And then finally we moved down, punished the longs for the last time, and then price is able to move up. I think that's likely to happen with this maneuver as well. I think that we're going to see another hunt, a little bit more sideways consolidation, a little bit of a float off, and then that most likely gets sold into. Again, trading the 8-hour time frame, this becomes very deterministic for me. I'll simply be looking to see where the 8-hour candle closes. I would expect the 8-hour candle, the current 8-hour candle, to close somewhere in the vicinity of 39.80 and 4,000 before we get sold into. Should it get sold into, then I will probably be scaling into my position again. I've already taken 50% profit as per my strategy on my initial short position that I momentum entered from 40.15. Took profits at 39.50. So I'm 50% out. My stop is now at break even at 40.15. Should that get hit, that's okay. I've had a profitable trade, and then we'll look again. I get some flack for this, guys, but I'm sticking to my guns, guys, because I'm not a wishy-washy trader. I'm not. You're going to see people on. You're going to see traders who are going to change their tune every volatile move that the market makes. I'm short on Bitcoin. Okay. I don't really care what Bitcoin does. I'm not looking to go long on Bitcoin. Some very key things have to happen for me to go long on Bitcoin. I have to start seeing the alts dump precipitously. I have to see a very convincing daily open and close above this previous level where we rejected from. I mean, we're at least talking at this point in time about 4,100, 4096 is the actual level. Now, you guys will recall that I had previously said that I would be going long on Bitcoin had we closed above 38.86. We did do that. I didn't go long on Bitcoin. I should have gone long on Bitcoin, but it's not. I'm happy that I'd like to say that I'd be happy with the profit had I taken it, but it just didn't. I just didn't feel right about it, and that's one of those few situations where, even though indications and analysis will say do what you should do, I did sit out on that one, and that's going to happen no matter how experienced you are as a trader. So, but that's okay. No money lost, nothing ventured, nothing gained, nothing ventured, nothing lost. So that's all right. So being this close to resistance again, my tune remains absolutely the same. Looking at the 24-hour time frame. And again, I don't know if some of the members groups, some of the members in the subscribers, some of the subscribers in the premium trading group, I don't know if some of their settings, for example, are different. Perhaps they're calculating advanced price action. On the daily time frame, I got some messages last night where people were getting the purple dot of death. Just like we got over here, we got the purple dot of death before, Bitcoin rejected on the time transformation indicator. Going back in time. Let's see. We didn't get purple dots of death until this range right here back in August 2018 on the daily chart, and that was really the last failed rally before price broke significantly to the downside. Yeah, so I didn't see that purple dot of death on the daily chart. I see it neither. I don't see it on the perpetual swap, nor do I see it on the tether pairing, to be quite honest with you. Again, the last time we got double purple dots of death was back here in February 21st and 22nd. So the first dot of death I did not short. The second dot of death I did. Why? Because we moved into resistance on high volatility. It's that simple. And then going back again, we don't get the purple dots of death until September 2018. So Floyd, good to see you, man. How you doing, brother? Jasper, yeah, I turned the music off because I already got like 7 negative comments on it. I'll put it on the stream. Again, Scott's got that, I don't know what it is, Audacity or something like that, like the copyright-free music. We'll try playing around with that because honestly, the music, it helps me flow a little bit better, guys. Zuhair Nakfi, what's going on, man? Exited my short from 40.45 from the first high when I saw the drawdown to 40.65. Just as I did that, we started the dump. We entered at 39.77. Yeah, you know, I think you want to be cautious, man, because it's areas like these that, and even though I am short on Bitcoin, again, it's all about timing. I've got a fairly comfortable position, as do most of the guys in the members lounge that were awake this morning when I posted that. And the thing is, areas like this are going to lure a lot of traders in. Highly volatile movements are often traps. So it's not that, you know, again, being short from anywhere in the upper standard deviation of this price movement is a good entry. But entering now, again, I think that we most likely get another hunt. So you might be okay, but I don't like entering. I don't like being late to the party on movements like this. So often, if I am late to the party, I'll just sit out. And I think that's, if I'm being honest with my analysis, I think that's probably my mentality, my thinking back when price did break that 38.86, because it's not like it broke and just hung out. I think it broke it and popped pretty significantly. I mean, you know, let's be honest here. I had 8 hours to enter, so I think I was just being a pansy. Let's be real. Moving on. Let's see here. 18 Mile Creek, good to see you guys. Daniel Ham says, buy Dragon Chain, DRGN. You know, I remember Dragon Chain from last year, and I remember being kind of excited, probably because it has the name Dragon in it. But I know that it's been doing some stuff lately. Oh, let's look at that, Ken, real quick. Again, as we talked about yesterday, yeah. The entire alt market having a pretty significant dump off, guys. So I hope you guys did lock in some profits while you had the opportunity. Looking at Dragon, I think, no offense, man, but I think, you know what? You know, let's look at Dragon here. Dragon hasn't really done anything. It hasn't had that nice alt season rally like everything else. So maybe it'll be one of those ones to move. I'd be hesitant of anyone kind of plug in altcoins right now. Because I think that we're entering into the secondary phase in the market cycle, to be honest. But that doesn't mean that you're not going to continue to have your random pumpers and your dumpers. So look, I mean, just objectively looking at Dragon Chain, if we just do something that's not technical analysis at all and just say, seems like every other alt is pumped and this one hasn't, and it's got the name Dragon in it, man. Hell yeah, dude. So I don't know, maybe. Gypsy Hill, here we go. What's going on, man? Caribbean Crypto Show, good to see you, man. Please take a look at the dominance chart and compare it with Bitcoin. Why do they move opposite each other? Because the dominance chart is going to be monitoring, and again, I want to make sure that I understand what you're asking, but just to be clear, the Bitcoin dominance chart is going to be measuring the market, the volume of or the strength of buying. I guess how do I put this in a more clear way? It's the market cap of Bitcoin versus the rest of the crypto market cap. So when the market cap of Bitcoin is, and this is just what I've noticed with just realistically trading this market for the last 2 years, almost 3 years now, yeah. No, 3 years, yeah, 3 years in 1 week, yeah. Is going to be when Bitcoin's price is stable, and this isn't always true, but at this current phase, as long as Bitcoin's price remains stable and on a slow tilt to the upside, altcoins boomed. Again, there's actually an interesting article out from Binance on coin correlation. I didn't get a chance to fully read it last night. I got busy with some other stuff. Really obsessed with working on my strategies and my indicators right now. But I'm going to finish reading that tonight. And then somebody threw a really interesting article my way. It's not an article. It's actually a published paper. I'm not going to say what it is because I haven't read it yet. And I don't want to run the risk of saying something on stream that's like, oh, hey, I found this really cool article, man. You guys should go check it out too. And then it's like some scam or something. But it seems like an interesting thesis on the movement of Bitcoin price action as it relates to germ theory, or the exponential growth of bacterial cells based on n number of users. So I'll read that. I'll give you guys my analysis and my thoughts on it. That's pretty volatile statement there, Fabricator FBF. Matt, no, man. That's as soon as you DM that to me, that becomes CC trademark, man. No, full. I really like that. Full shout outs go to Matt for the purple dots of death. What's going on, Yagami? What's my thoughts on ADX DMI? I don't think it's a very good indicator, to be honest with you. I think the ADX is okay. Maybe if you put a moving average on it. I don't think it's very good for what it purports to do for cryptocurrency. I mean, it could be okay. I know some people that are pretty hot on it, but in my experience, it just doesn't give me very good signals. And I think that the DMI is mostly useless because of its lag. Ian, Dragon Chain chilling. Yeah. Yes, Tic Tac. Correct. Is Bitcoin dying? No. It's just got a stitch in its side. All right. So, anyways, let's continue on with this, guys. Let's talk about stop loss placement for shorts on Bitcoin. Now, I'm very comfortable with a stop loss at 40.50, and I'll tell you why. Because that's the previous level that was rated. Now, most people would have you believe that you can never set a stop loss because, okay, let's do the evolution of mentality about stop loss placement. You're going to be taught when you begin trading that, well, you set stop losses directly below previous lows. Like, that's what you do if you're going long, and you set your stop losses above previous highs if you're going short. Okay, well, you guys have probably learned by now that that doesn't work out, especially in crypto, especially on BitMEX. But once you see a hunt of a level, if price is truly bearish, then I have no problem setting my stop loss at that level, for example. You know what I mean? So, and that's exactly where I place my stop loss. Short from 40.15 on average, stop loss placement at 40.50. Now that I've hit take profit 1, I have to move my stop loss to break even and look for another opportunity to enter should my trade get hit. But I've had a profitable trade, guys. You know, I could go on home for the day, but we won't. We'll keep soldiering this out, man. When more. So that's because again, if price is truly bearish, then this level has no reason to be returned to. If price returns to this level, then we're really not bearish, and you missed your opportunity to be in a long position. So general rule of thumb, I don't like setting stop losses in areas where retail traders are likely to set their stop losses because it creates an area of supply and demand or liquidity that is likely to get hunted, as we can just see exactly right here. So this is why I put, I posted in I was talking to the guys earlier and I said, there's two options, man. Honestly, I think we continue to the downside here. This seems like a pretty strong movement that probably will have follow through. But there is another potential that we just continue on in some more consolidation, man. Now, the reason why that's possible is because we've hunted the shorts and we've hunted the longs, and now Bitcoin gets a chance to pick what decision, which side it wants to take. There's lots of things that we can look for. Nothing that's going to tell me right now, to be quite honest with you. Let's go look at BitMEX stats, see if we can wheedle anything out from this. And here's the thing about BitMEX stats, man, is you definitely, in my personal opinion, you don't want to be trading directly off of this. This can be helpful, but it's speculative because kind of the common. The common idea about it's a very powerful tool, but the common idea is like, okay, so let's look at open interest here, for example. All right, so we have a significant drop off in open interest, in price moving in consolidation, and open interest rising back up. I mean, what does that tell you? Does that tell you that obviously that means that longs and shorts are increasing in ratio, and there's more open value rising? We can see open value rising as well after a significant amount of turnover. But we've had hunts to the upside and to the downside. So is the new trend to the downside? So is this an indication of the downside strengthening? Is this an indication of that one candle representing, a reversal? Is that trend strengthening? It takes time for some of this to play out. And so after about another 8 hours of data, I'd feel fairly comfortable being able to reference this data. Also, guys, if you guys are using indicators to move your trades, and this is something I don't think we talk about enough, if you guys are on the lower time frames and you are using indicators, which is totally fine. You don't have to worship at the altar of price action. It is a powerful tool, but indicators are good as well. Again, some of the best traders that I know have an indicator-only strategy, and they do not look at price action. They don't care what price action does. The only thing that they care about price action is if you are using an indicator to trade the market. Keep in mind that big candles like this are going to throw your indicators out of whack. Maybe not, potentially depends on your settings or your sensitivity or what time frame you're trading. 8-hour time frame, not going to mess with it. 15-minute time frame, you're whacked a noodle. Candles like this, you cannot use any oscillators until the look back period on your oscillator has gone beyond the look back for that candle. Does that make sense? So you've got, let's take time transformation, for example. And time transformation is uniquely designed to avoid these problems. But if you're using one of the bad indicators, stochastic RSI or RSI or stochastic or something like that, right? Or Bollinger Bands or something like that, right? If you get a massive candle like this, because again, those indicators are going to work really well when the market conditions are like this, okay? When you have a big candle like this, keep in mind that they're going to not be indicative of highly repeatable price action, because candles like that aren't going to happen all the time. So they're going to throw all your indicators out of whack. So you have a look back period in your indicator settings. So say, for example, using the RSI, say it's got a look back of like 15 or 14 or whatever. You're going to have to wait 14 candles. You're going to have to wait 14 candles to use that indicator, especially the ATR. Now, the ATR, as you guys know, is an indicator that I use all the time to determine risk. The ATR is going to be thrown completely out of whack. Now, big candles like this, let's be honest. So let's be very clear about this. So helicopter candles like this, they're actually not going to throw your oscillators off too much. The reason why is because most oscillators are going to be calculated on closing price and not the difference between the high and the low. So most oscillators are sourced on closing price. So the difference between the previous closing price and the current closing price. So most oscillators are going to ignore this, these big wicks. So when you have hammer candles like this, that open and move, have a low that's very far away from their open price, but then close very close to their open price, that's not going to throw your oscillators out. Candles like this, where you have a candle that is abnormally far away, where its close is abnormally far away from its open, that will throw any indicator you're using out of whack. If it doesn't matter what it is. But when we have candles like this, and like the helicopter candle, and like candles like this, if you are using the ATR, which you should be using the ATR to manage your risk and determine take profit levels, it's going to throw your ATR out of whack. So a little cheat, a little trick, a little tool that you guys can use is if you are using the ATR to manage your risk and set your take profit levels, you're going to go to the candle directly before the abnormal candle and use the ATR settings for that. For the next, if your ATR is set to 14 like mine is, for the next 14 bars. That is going to be your ATR for the next 14 bars after you have a candle like this, okay? Candles like this, candles like this. This one's fine. Candles like this and candles like this. Depends, use your own preference, but definitely this candle right here. Using ATR to manage your risk and set take profit levels would have been completely skewed by this, because the ATR is actually measuring the difference between the high and the low. Sean Bond, yes, I do. I do read research papers on new theories or fundamentals, yes. I'm waiting for the dominance. You didn't finish talking, man. I don't know. I'm not sure how much more to say about it. It's not really okay, we can talk about Bitcoin dominance. I'll put it on here actually, because that would be something interesting to talk about. So I want to talk about things that I saw that made me want to be in a short besides price action. 18 Mile Creek says, if I had only 3 indicators to use, what would I choose? Time transformation, Quadrigo ATR, and that's a good one. Ichimoku. Viewer count is consolidating. We may see a move up to break 1,000. Well, that's awesome, man. Thank you guys so much for supporting the show. If this is your first time here, guys, hit that notification bell, guys. Doesn't I assume you guys are subbed. Hopefully, I appreciate it if you are. But you're not going to get anything. YouTube's algo doesn't like me. Hit that sub bell, smash up you old likes. Highly appreciate that, man. Thank you so much. If you guys want to support us, you guys can come watch us on Twitch as well. Let me give a shout out actually to we got Tito Morabito, Claudio Schuster, FTV, Peter Liapis, Paul, Michael Florenth, Mike Amron, and Frank Allegre. Guys, thank you so much for the subs on YouTube, man. Welcome to the community. Looking forward to talking with you guys. Make sure you guys join the Discord. You guys can talk to me a little bit more. First Rhino Trader and Relictus15, guys. Thanks so much for the follows on Twitch, guys. Welcome to the family. All right. What time is it? 12:41. We got another 19 minutes before I got to take a break. So let's continue on with this. We got a lot I really want to get to, man. Okay. I see what you just did there, Scott. Very slick, bro. Let's finish with the Bitcoin TA, man. We talked about stop loss placement. We talked about liquidity grabs. We talked about 8-hour candles. We talked about setting oscillators correctly. Okay, so and then again, just to comment more on sticking to my guns about being short on Bitcoin. The reason why, again, the main reason, guys, is just price action in general. What my oscillators tell me, or what time transformation tells me more specifically, as well as confluence with other things, and overall the fact that we're at resistance. I don't long resistance, like period, point blank period. Like I don't care. I don't care if Bitcoin jumps. Here's the thing, guys. I don't care if Bitcoin somehow magically jumps from like 39.61 to 5,000. Although realistically, like if that starts happening, I'll find a way to be in the long. If it's a correct setup, guys. Here's the thing about being a profitable trader, because I assume that that's why most of you are here. If you want to be a profitable trader, you have to understand it is not about catching every move. It's not about taking a trade all the time. It's about taking the right trades at the right time and managing your money appropriately so that if you're wrong, you don't blow out your account, and that if you're right, you can have consistent returns. We're gonna do a video on how much money does it realistically take to trade cryptocurrency or be a profitable trader. Marlon Jones, Bulls on the block. Thanks so much for the $2 donation, man. Asks, is ETH falling off of a cliff? Would I sell now? I would very much like to aggressively short Ethereum. And we didn't do a lot of Ethereum TA. We can get to that later if we want. My issue with Ethereum, though, is since it's more volatile, here's the thing. We didn't have that... unless you really consider this is the follow through. You can consider this, again, we were talking about that hunt to 142, 143. We didn't see that very nice, clean hunt above recent price action like we did with Bitcoin. So I would hate to aggressively enter into a short on Ethereum and then get punished for it. So let's go look at BitMEX. If we look at the XBT chart on BitMEX, we can just see this beautiful 8-hour hunt. I mean, obviously happened on the hourly candle on the lower time frames, but again, I trade the 8-hour chart. So we can see this very beautiful hunt above previous highs and then a very volatile move down. We don't see that on Ethereum. We don't see that on Ethereum. There wasn't a hunt. So I'd really hate for bottom shorters to get punished here by price moving up here to 138 to 139, 141 before collapsing. And we talked about this divergence in Bitcoin price action. Look at the Ethereum chart over the last 8 hours. A little lazily listing down and to the right. Always we want our chart to be listing lazily to the right. It's listing lazily to the left. And Bitcoin moving in pretty much the exact opposite direction. Pretty much moving in exactly the opposite direction. So not that they're not correlated still, like nothing drastically has changed. But I'm actually waiting to see a little bit of a higher price on Ethereum. Again, we might not get that opportunity, but that's okay. I'm not going to aggressively. I'd really like to aggressively short Ethereum here at 134. And I might end up, I won't regret the opportunity to miss it, but thanks, Sean, for the subscription, man. But yeah, I'd be cautious about shorting Ethereum at these price levels. Overall, you're correct. Timing wise, I don't think that right now is the best time to go in. Depends on your tolerance for risk. Depends on where your stop loss placement would be. Okay, so talking about just vicinity to resistance, guys. I don't long in the vicinity to resistance. I don't. It doesn't happen, man. Fading breakouts is one of the most profitable strategies for counter reversal trading out there, period. I used to fade breakouts in equity. That's not at all how I used to trade on Forex. In Forex, I am a trend trader, like 100% trend trader. But in equities and crypto, I am a reversal trader. I'm a counter trend trader. There's nothing that gives me more joy than fading breakouts, because 9 out of 10 times you're going to be right. Remember, we've talked about this a lot. When you have a range and you're looking to violate the extreme high or the extreme low of that range, 9 out of 10 times it's going to be a good reversal. It's only going to be that one time where you're actually looking at a genuine breakout. Genuine breakouts only happen once. Genuine breakdowns only happen once. That's why it's a profitable strategy, if you manage your risk appropriately for that one time where you get smashed in the face. What you don't want to do is be very profitable scalping a range and then have a garbage risk management strategy, so that when you actually do try to fade the genuine breakout, which will happen to you if this is your strategy, you're going to be fading breakouts, fading breakouts, fading breakouts, and then you're going to fade a breakout and it's going to punch you in the face. The goal and the reason why money management is more important than entries and exits. It is. Anybody that tells you that having the Midas entry and exit strategy is the most important thing is trading has not managed an account for more than a couple of years and has probably done nothing but blow out accounts. And you probably shouldn't be taking advice from him, because I can tell you, having done this for a long time, that I would not be able to do this on a daily basis if I didn't put the emphasis on managing my bankroll above all else. That's all that matters, dude. I could literally flip a coin and go long or go short. Hey, Daniel De Leon, I've gotten so many requests for Forex. I've got some stuff happening over there, man. But I've done some just glancing. So the last paper trade I took was on the euro pound, off the bullish diversal, as well as the Wadatar indication right here. Again, when it comes to Forex, guys, I trade the daily chart. I check the chart once a day. About 20 minutes. This was what I did for years. Check the chart once a day, look at the daily chart, manage my positions then. So this was the last paper trade. Got about 130 pips off of that trade so far, just off the paper trading. And looking at, did you say the dollar euro? Yeah, the euro USD is a pretty strong move to the downside. So hi, man. Thanks so much for the sub on YouTube, man. I highly appreciate it. So yeah, and as you can see here on the 24-hour time frame for the euro USD, for the euro dollar, we did get that nice purple dot of death. Trademark goes to Matt and Cracking Cryptocurrency. But yeah, purple dot of death right there. Not a confirmed reversal, but good indications, as well as you can see that nice liquidity grab to the upside. Now keep in mind, I am not a reversal trader on Forex. I will not trade reversals on Forex. That's not my strategy. I am a trend trader on Forex. A trend trader. So things like this candle right here, I would have been short on, right? I would have been short on this. Why? Because Fisher is going below zero, and Wadatar is telling me that I can be in the trade. Candles like this, I would not be long on. Candles like this, I would be short on. Candles like this, I would be long on, and I'm looking for about 100 pips. Depends on what ATR is, but trade the daily chart for Forex. I like to get 100 pips per trade, at the very least. But it just depends. Lately, from my buddies in Forex, 60 to 80 is probably a better range right now. You just have to adjust accordingly. All right. Guys, remember, whenever we're in the vicinity of resistance, whenever we're talking about breakouts or breakdowns or fades, something is always more likely to reject from resistance than breakout. So just trade, if you're going to be a counter trend trader, which I think is the more profitable strategy in cryptocurrency, that you just keep that in mind, that you're always going to be hypothetically on the right side of the trade if you're looking to short resistance and long support. The reason why money management is so important is because if you don't manage your bankroll and risk appropriately, when you do run into that time, when you do fade a genuine breakout or long a genuine breakdown, you're going to blow your account out. And all the profits that you got from scalping that range or counter trend trading the range are going to go wash away. That's why you need to manage your risk appropriately. ATR can help you do that. You should be, if you don't have ATR on your chart, you need to put ATR on your chart. So, and this is why here at Cracking Cryptocurrency, we do not long potential breakouts. We long confirmed breakouts. This is why we do not short potential breakdowns. We long confirm short downs. But we don't really like momentum trading like that. Today was one of those rare opportunities where I did enter into a momentum trade. And we're about to go over those reasons here in just a few minutes. I do like counter trading. All right, so we've got about 10 minutes for the first break. Yeah, I found a pen, man. You're on me. You guys took the music away from me. So Hybe M asks, or says, potentially asks, I'm a noob, so I guess my question is whether you hold a position for a while. I took a short at 40.10, good entry, and I'm planning on holding it. My liquidation is set at 44.50. Well, I took a trade at 40.15, and my stop loss is set at 40.50, and I've already taken half of my profits. If price returns now to my break-even price at 40.15, I will be out of my trade at break-even, even though it won't be break-even because it will be a profitable trade. If price returns up to my entry and then rejects and goes back to take profit 1, I will probably add more to my position. We'll just be patiently, we'll be patient and wait for that. The correct amount of time, and again, I'll answer your question actually, because I hope maybe when I get to the question of the day, hopefully that will answer your question. Wayne Tech says shorted ETH at 137.75. Arunas Malleus says, what is your average return monthly trading crypto? I don't focus on my monthly return. I focus on my equity curve over the course of the year. When I traded Forex, I made about 25% ROI every year. In cryptocurrency, well, I mean, it's difficult to calculate in cryptocurrency because when we look at years like 2017, a lot of investments paid off very handsomely. When we look at the year of 2018 overall in trading, we made about 45% yearly ROI. When we look at the year of 2019, that'll be measured at the end of the year. So that's all differential because again, I have different trading accounts. I manage different accounts. So, but when 2019 is done, I'll compile the data for you, and that will be publicly available. The information that I can release. So that would be my personal. Max X says very succinctly put about fading breakouts, but preparing for the one time you don't get wrecked. Thanks, man. Yeah, that's the point. What are some important resistance levels for Bitcoin? 4096. Depends on what chart you're looking at. The levels that I have on my chart for the perpetual swap contract are 4096. Getting above that, we're talking about 4220. Looking at the tether chart, which is really what we should be doing. The MEX is going to move more volatilely. We've got the resistance zone from 4088 to 4156. Trunker says, I've also been playing with a test account in Forex. Do you think it's a bit easier to trade than crypto? It's less, yes, with the right strategy. But I think that crypto will make you a better trader and is more profitable. Mustafa Freeman says, how can I get your indicator? It's right at the top of the screen, man. All subscribers to the premium trading group not only get access to all the Kraken cryptocurrency trader and analyst trade signals and setups, our private Discord community, access to all my premium webinars, but also all my indicators and strategies as well. Yeah, I took the clicking off, man. Need a fidget spinner. I got one around here. Beautiful World says the SPY is mounting on and off resistance. I think that, again, I talked about the SPX yesterday. Oh, again, I've been referencing it every day. Let's go take a look, man. We haven't looked today. I looked at it this morning, and I think it's still coming down. Look at SPX. All right. Interesting. Interesting. So looking at the daily time frame right here, we did have a nice 2 days of decline, got the sell signal from time transformation, and getting that nice bounce off of resistance. Let's go look at the weekly, which is what I'm interested in. I'm interested in the weekly closing above this level. Now, personally, I'm of the opinion that we entered into an area of liquidity above previous highs, okay? This would be, and this will answer your question as well, Paul Generis says, what does fading a breakout mean? So that would mean, okay, so if we look at this chart of the S&P 500, price appears to be breaking to the upside. The term fading means that I am actively counter trading what would appear to be the obvious trade on the chart. Because you would look at this chart and you would think to yourself, man, this thing is breaking out. Where a counter trend trader or a fader is going to look at this trade and say, nope, it's a fake out. I'm going to go short and I'm going to get all this profit when this thing turns around because I'm entering at the top. So to fade a breakout or to really enter into a reversal correctly, you have to have the courage, you have to have the balls to short something when the candle is green, and you have to have the courage to buy something when the candle is red. Always remember that if you're looking to maximize your profits, again, I do most of this based on my strategy because it's better than being subjective, but my general rule of thumb is take profits on big green candles, for long trades, take profits on shorts on big red candles, always. That's why I took profit on that last big red candle. Doesn't mean you have to exit your position entirely. Scaling out is the right way to go because you don't know how far something will run. You don't want to, just like, again, profit ratios aren't that good. No, there's the pen. Sorry, I'll put the pen down. Profit ratios aren't that great either. So people will tell you that, man, bro, once you hit 3-to-1, you need to exit your position. Once you hit 2-to-1, you need to exit your position. That's not the way I trade. That's how. Now, I will trade with predetermined profit targets on alts because they're volatile and I like to trade that way. But in general, with the trade, I take profit. I take half my profit off the table at a certain level. And then I move my stop loss to break even. And then I don't exit the trade until I get an exit signal or until, which would also be an exit signal being from one of my indicators or my strategy, or the trend reversing, which is, again, the same indicator, but maybe not, maybe from a different analysis. Clear signs of, or until I get stopped at a break even. Because if you use profit ratio targets, you're basically saying, and again, I will do this on altcoins, but on other trades, I typically won't. And if you're new to trading, how can I define this? If you're struggling with where to take profits, I do like to have general areas where I would like to take profits, okay? Doesn't mean you have to take them there. Because if you do that, let's say that you could take any example, you can take any chart you want. Here's Tether, here's Bitcoin Tether. Let's say you were short from, up here, right? Say you were short here. Here's a sell signal from time transformation, right? Let's say you're using like 3-to-1. So maybe that level is right here, okay? So you're exiting the trade right here. Okay, good profit. But you're basically saying, because I have this arbitrary predetermined, I have to be completely out of the trade, I want nothing to do with all of this. That's what you're basically telling the market and telling your pocketbook. You're saying to yourself, I don't want anything to do with this. I'm happy with this. In my experience, you don't want to do that. Even if you only let 10, 20, 30% of your trade ride, it's fine. I always have my first take profit target and then 2 or 3 beyond it where I would like to take profits. But I don't fully exit a position until I get confirmation that the trend is reversing. So in this case, I would have gotten a buy signal from time transformation right here. I would have gotten liquidity grabs at support. We would have been hitting support, so I would have been out. I don't short support. So, or any reasons that could have happened at that point in time. We'd have to do a fuller in-depth analysis of price action at that time. Anyways, I digress. So yeah, when you use like arbitrary take profit levels to be 100% out of the position, you're basically telling the market that I don't want anything to do with how far this thing could run. So never be all out. I don't like to scale. Sometimes I scale out all the time. I don't always scale in. I'll often kind of enter a trade in one shabab. Lately I've been layering bids because of how wide the ranges are and how high volatility is. But again, different times in the market cycle. What do I think of Elliot waves and Fibonacci? I need to come up with like some good gag. They suck, man. They suck. They don't work. Fibonacci's okay. It depends on how you use it. If you use it the regular way, it can generally be good if you use it for a very specific way. But the problem with Fibonacci is that there's so many ways to use it. If you don't, it's like the ultimate hindsight indicator, just like Elliott waves. But if you use it appropriately, and by appropriately I mean if you're going to use the 618 and the 786, use the 618 and the 786 and use it every single time. And if it works for you, great. If you're going to use ICT's method, for example, of like 0.5 to equilibrium swing, use that every time religiously. Do not throw Fibonacci on a chart and have like 10 Fibonacci lines and be like, oh well, look, we bounced off this line, and then never talk about when it doesn't bounce or completely disrespects every other line. That's the problem with Fibonacci. I see this a lot, dude, and I've thrown fibs up because sometimes they're helpful, man. But like here, for example, like let's throw a fib on price action, right? And you can see that I pretty much use ICT's method for using fibs. But let's look at these fibs, right? Okay, let's drag this over. This might be a little hard to see because the way that I do fibs, but anyways, okay, so we've drawn a fib here, right? And you're gonna, okay, like look here, all price bounced off the 786. Amazing, you know what I mean? And then it shot through the 618 and then pulled back, all right? And then it just completely didn't care about the 0.5, the 382, the 336, didn't care. It didn't care about them on the way back down. And you're like, oh, look, we're consolidating between the 0.5 and the 382. I mean, come on, dude. Like, how can you trade off any of that, dude? You have to, Fibonacci's fine, but as with anything, you have to like have a very specific idea of if this happens, then I do this. Not, well, we're likely to go here. We might go here. We might go here. We might go here. We might go here. No, man. I've done that in the past, and I've shown Fibonacci's in the past just to give you guys a general idea. And sometimes they're helpful, man, but overall, they lead to sloppy trading, man. Laughing Sausage says, wow, I have to have the courage to lose all my money. Yeah, you do, man. Yes, you do. You got to have courage. You're welcome. You're welcome, Larry. Can you show us the proper way to use the fib? No, there is no proper way to use the fib. If you're going to use the fib, as with anything else, use it consistently. Sashko, hey, what's going on, bro? Where do I expect the level? Where do I expect to be the level of Bitcoin capitulation? So I'm pretty confident that, and again, I don't trade my opinion, but my thesis is that Bitcoin returns to 3,500, 3,600. Depending on what happens at that level, I will most likely long bigly, based on what I'm seeing in the market right now. I'll probably long bigly at 3,500, 3,600. Don't have any shotgun buy orders down there. I'm going to wait and see what price does there, but I feel pretty good about that price level. I feel like we've got some untapped liquidity right here, like a little bit below 3,500. So it could go as low as 3,400. If we start going below that, then I stay in my long-term short, man. Again, I'm not going to counter trade and pick up longs. Like, I'm not going to knife catch these levels. I'm going to wait for price to stop, consolidate, and start moving up a little bit, and then I'll be long. But just in general, I've been changing my tune on this a little bit lately, just kind of looking at the markets. But still, as we approach this level, you still want to be in a short. I'll still be in a short because you don't know how far down price will go. And I would be very pleased to be proven wrong and have price move to the upside. Do I think listening to Trollbox is the best way to trade? Yeah. No. Wayne Tech, go to the, I'll tell you how I use it. Go to the 8-hour chart. When you get a buy signal, set your stop loss wherever price is on the close of the candle that gave the buy signal. Set your stop loss, whatever ATR is, take ATR and multiply it by 1.5. There's where your stop loss is. Take ATR, whatever the value of ATR is, and add it to the closing price. And this is if you're going long. Add it to the closing price of the candle that gave you the buy signal. And that's where you're going to take 50% of profits and update your stop loss to break even. And then that's it. It's that simple for me. 90% of the time. The other 10% of the time, well, I guess it's probably more like frequently now because now we've grown such a larger community. So we're in there, we're in there taking a little bit more volatile trades. But 90% of the time, it's that simple for me. ATR is going to represent ATR. You can also use ATR. It's a little bit different in cryptocurrency and Forex. You'd use it like, for example, to figure out your price per pip or your risk per pip. You can use something like risk per dollar. I'll make a video on that sometime. It would actually probably take me about 30 or 45 minutes to explain that, to break it down. But for practical purposes, that's how I use the ATR. I don't really use the ATR in cryptocurrency to tell me how much to put into a trade. I know a lot of people like to use ATR to do that, but it's way cleaner to do that in Forex, for example, to measure out like risk per pip. In crypto, I just generally use, my risk management strategy is distance to stop divided by R divided by distance to stop is my position size, and I leverage up accordingly. Where do I see us going in the coming days or weeks? I'm primarily bullish because we've been slowly moving upwards, but I want your opinion. Listen, I'm overall bullish too, but just not right now. I'm long-term bullish, short-term bearish, mid-term bearish. So I think we're likely to have a correction under 3,600, 3,500, and then we'll reevaluate. I really don't think we're going to go above 46.24 anytime soon. I honestly don't think that. But I'd be happy to be proven wrong. I think that we're going to have to, at the very least, consolidate for a longer period of time. But it will happen. Keep calm, be patient. These things will come. Good things come to those who wait. It is 1:08, guys. I've got a lot more stuff to talk about. I didn't even go over. Okay, so I'm going to take a quick 2 to 3 minute break. When I come back, I'm going to talk about signs to watch for to know that Bitcoin might be making a volatile move to the downside or might be putting in some bearish signatures. I'll go over that. We're also going to finally answer the question of the day. I promise. I did do Steam Coin and I did do Ken Coin. Wonder what I have up on my schedule. I'm probably being a terrible host because I updated the schedule. Okay, we looked at BTC, SPX, ETH, and trade length. I'm going to go over trade length, signs of bearishness we're going to talk about. And we're also going to talk about BTC dominance. All right, guys. So while I'm gone, man, make sure to smash up ye old likes. Highly appreciate as well if you guys do that. Come on over to Twitch. Give us a follow. Give us a sub if you guys want to support the show. While I'm gone, make sure you guys check out freemmo.krakencryptocurrency.com for your opportunity to win 5,000 MMO. It's right here. It is right here. So we're giving away 25,000 MMO coin. It doesn't cost you anything to enter. You can enter using any of your existing social media accounts. And 5 lucky winners are going to win 5,000 MMO apiece, guys. As I talked about yesterday, the MMO marketplace is live. It's mmocoin.shop. You can purchase items on here with MMO coin. If you guys are interested in listing your own products and services on the marketplace and receiving MMO for your products and services, you can click the link down at the bottom of the screen to become an MMO marketplace merchant. Fill out the form, guys. So if you're just looking to add another avenue for cryptocurrency, you guys can go do that. We're going to look at all the other data metrics when we come back as well. Also, while we probably won't have time to read them all, and we're going to talk about this a little bit more in depth, but if you guys head over to our blog at krakencryptocurrency.com/blog, you guys will be able to see my, this is a little bit in delay, but this is my market update from the 19th, BTC USDT. This is my post on psychology as relates to the Binance Launchpad, which we're going to digest a little bit here. And then also we have some good new articles from contributors to our blog, Joe, talking about the European Central Bank proudly boasting about its ability to print money, which is pretty sickening and pretty eye-opening if you guys weren't aware of that. So guys, go check that out. Highly appreciate that. And then we also have an interesting article here about Engine Coin releasing their blockchain software development kit and their partner with Unity. So try to keep you guys up to date on the latest news that we can, at least what we think is interesting. And again, I talked earlier about the difference between content that is just rereading headlines and content that is genuine, unique, original thoughts and ideas. That's what you're going to find on the Kraken Cryptocurrency blog. So we're like 7-Eleven, guys. We're not always open, but we're always doing business. I'll be right back in just a few minutes, guys. Don't go anywhere. All right, guys, we're back. Thanks for hanging in there, guys. All right, seem to have lost the YouTube viewer count, as we occasionally do when we come back from break. Not saying that you guys dropped out. I'm talking about the thing down there on the bottom right-hand corner of the screen. Sometimes if I do this, it'll work. Ah, there we go. Fixed. All right. Thank you guys for hanging in there with me. All right, let's go over some stuff. All right, here's what I want to talk about. We're going to look at data metrics and signs to watch for. Okay, so if we go over to here. Okay, so let's go to vcdepth.io. And in general, this isn't the actual metric that I watched, but we'll see how well it compounds what I'm looking for. So the total global market depth did increase. All right, did increase from a negative of yesterday's setting. All right, if we look at where we were at, precipitously, 11.63% yesterday, 11% almost to the higher metric, down about another percent. When we're looking at the global combined market depth ratio. That is something to watch for. But the more significant thing is to watch the MDR of individual altcoins, especially the ones that have been kind of rallied as, hey, these are really on a tear. Just a cursory glance of, let's go over to the charts to actually see the metric that I had watched for myself. If we just do a cursory glance of the majors, for example, on Binance, for example, we see the altcoins start to droop off, right? Pretty precipitously. So ZERP, EOS, obviously Litecoin, and a significant tear to the downside. Oh, I'm on the weekly chart. So let's 8-hour chart. All right. So we start to see things like this. We start to see everything start to drop off simultaneously. Everything that, people have been like, oh, things are going really good. Things are going really good. What that is indicative of is that profits are being taken pretty much across the board on all these coins. We are expecting a fairly volatile move from Bitcoin. So altcoins drooping is definitely one thing to be watching out for. Here are the two arbitrary circles that I've drawn for BNB. People ask me, where do you see BNB going? So I just drew my little arbitrary lines. We have hit arbitrary circle number 1. I'll see you guys down at arbitrary circle number 2. MDR is turning bearish also on their prospective coins as well. You're going to see that significant change in volume as well. In general, profits being taken, and then again, you look for the actual price action confirmation, which again, we got that on Bitcoin after making that high that failed to close on high volume and high volatility. Blockchain. What's the name of this beat? The name of the beat is it's West Coast by Ryan Little. It's down in the description. Full credit goes to him. All right, so today we've talked a lot, man. We've talked about general rules of thumb for setting stop losses, the difference between higher time frames, why I chart, and a method to do that. We've talked about average true range. We've talked about fading breakouts. We've talked about MDR. Oh, the other big thing to watch is this. Going over to CoinMarketCap as well. This is interesting. This is actually a really good metric to watch. Is if we look at the stable coins like Tether. When we look at the stable coins like Tether, let's scroll down. We'll find another one like Pax, USD Coin, True USD. Yesterday, we saw, and pretty much for the last several days, we've seen those percentages down about negative 0.5, 0.7, indicating that individuals are selling Tether, selling USDC, selling Pax to buy cryptocurrency. Okay, makes sense. All right, we should see bullish movements from coins. When we see it moving in the opposite direction, so when you see True USD, when you see that dynamic shift, so when you see things like we're down like 0.5%, down about 0.7%, which are significant moves for our stable coins. Okay, when you see that start to reverse and you see us go back up into the low reds, so 0.2%, or 0.1%, or actually, as we see here from Tether, which is the big dog, when you actually see it go positive, that is an indication that people are selling cryptocurrency to buy stable coins. And generally, that's also going to be a bearish indication as well. It's going to be a leading indicator. Now, it's not going to be a leading indicator for the altcoins, but this is just the way that the cycle goes, guys. Altcoins pump, Bitcoin is stable, altcoins are putting in, and again, altcoins have been on a very nice tear, guys. And I don't want to be the bear in the room saying that, hey guys, altcoin season is over. But again, I do think that Bitcoin is getting ready to make a nice movement to the downside. We'll see. Again, we talked about the two likely scenarios. Likely scenario one, which I think is the most likely, this has continuation. Scenario two, we move back into consolidation for a longer period of time. Altcoins might represent attractive buy the dip opportunities right now, and we continue to rally a little bit in the altcoins. I think that that's less likely. I'd give it about a 70-30 to be quite honest. I'm 70% likely that Bitcoin moves sideways for just a short period of time and then has some continuation to the downside. 30% likely that we go into a more extended period of consolidation after grabbing liquidity from the tops and from the shorts and the longs. That we move into consolidation, and then it's going to whether the market is going to flip full on bearish or remain slightly bullish for the short term, midterm maybe, is going to depend on what altcoins do. Because if Bitcoin does move into a period of sideways consolidation and the altcoins continue to rally, well then Bitcoin is going to consolidate for a longer period of time and things are good. But if Bitcoin consolidates and we continue to see altcoins sell off into stablecoins, then that would move me up to about 95% certainty that Bitcoin is going to have significant continuation of follow through on this. Because why? That makes sense. If overall the market sentiment, if Bitcoin moves into consolidation, which is giving the opportunity for altcoins to make plays, if buyers in the market don't take that opportunity to buy and turn the market bullish and continue these rallies that we've been seeing, and instead use this opportunity of relative Bitcoin price stability to sell out to take profits on their altcoins at a decent level in Bitcoin price or at a decent Tether price, then that's very bearish. That's very, very, very bearish. Okay. So signs to watch for: altcoins drooping, volume falling in general, MDRs turning bearish, stablecoin MDRs rising, their percentage gains turning from small reds or small greens, turning to small reds or small greens from large reds. Okay. Hopefully that makes sense. If you guys have any questions for clarification, make sure to drop them in the chat. I'll be happy to help you guys out. Okay, now something that I want to get to for a while, and that I've kind of gone over it, but I just want to go over it in depth. And this is the question of the day. And the question comes from Ed McCracken. I'm finally going to get a chance to answer this, as I said I've been going to. So Ed McCracken asks in the YouTube comments, Justin, when you are in a trade, how long on average are you in for? I understand all trades are not the same, but what is your average time in? So I'm going to give you the short answer and then the long answer. Here we go. So short answer. There is no regular length of time that I'm going to trade. If you really want the answer is going to be anywhere from 4 to 6 days on average, the way that I trade with the 8-hour chart. But that is not a helpful answer to you. Short answer is there is no regular amount of time that I'm going to trade. Here's the long answer. The long answer is I enter into a trade when my strategy tells me to enter into a trade. I exit the trade when I get an indication that we're going to move in the opposite direction. Now, whether that come from general trend analysis, whether that come from an indication in the opposite direction, like for example, on time transformation. So for example, if I get a bearish cross under or a purple dot of death, or conversely, if I get a bullish crossover and a green dot of life, I think that's what we're gonna have to call them, green dots of life, green dots of prosperity. We got to work something out, Matt. Then I'll be in a trade, especially if it's in confluence with my other indicators and price action analysis as well as the volume is there to tell me to take the trade and the volatility is right. I manage my risk with ATR. I take 50% of profit at one ATR on whatever time frame I'm trading on. For me, that's the 8-hour time frame. If I have many levels, not many levels, that's hyperbole, but if I have more than average levels of confluence that I should be in a bullish position, I will occasionally go to the daily chart and use the daily ATR to set my take profit 1. At take profit 1, I take half my profits off the table and adjust my stop loss to break even. And then I let the rest ride. Most of the time, I do have higher take profit targets that I will take profits on, partial profits, but I'm always letting some position of my trade ride until I get indications that the trend has changed. And that's how you're really going to put significant wins onto your trade. One way to look at it, especially if you're fading breakouts or scalping ranges, we're going to put on lots of smaller positions. And the purpose of those smaller positions is to counterbalance the stop losses that we are going to incur with any strategy. So after a long period of fading breakouts or taking reversals or anything, we should be ideally in slight profit or break even. That's good because that's better than most traders. It's going to be those big trades, and you never know when you're going to catch a big one because all you can do is enter when your strategy tells you to enter and exit when your strategy tells you to exit. But it's going to be those big movements that are actually going to make significant deposits into your trading account balance, that are actually going to reflect genuine positive growth on your equity curve. And trading like that takes patience. And this is why I have navigated away from high frequency intraday scalping to longer term positional swing trades. Now, while we do have certain automated strategies or certain indications that allow us to trade on lower time frames, in general, from my manual trading, for the bulk of my trading, and for the bulk of results that actually put significant deposits onto my account balance and reflect my equity curve, that's going to be the answer that I just gave you. When a trade tells me to be out is when I out. So I've had trades last as long as weeks. I've had trades last a few minutes. So my main point I want to make here is time considerations are the same as profit ratio considerations. They're mostly distraction. Then they can be moon dots. Hey, I like it, man. Moon dots. Moon dots and death dots. All right. Hey, what's going on? Zerp Andy? Good to see you, man. Okay, let's talk a little bit about this. Let's go over to the blog, and we're going to click on this. So if you guys haven't gone and checked this out, I do recommend that you read this. This is from yesterday. This is Binance Launchpad Sentiments, and this is my kind of exposition on trader psychology. I think hopefully you guys will find this helpful. And so I'm just going to take a quick crunch on this and just break this down a little bit. So the main key here is that when it comes to trading, entry and exits are important. Money management is important. Money management is the most important. But what goes hand in hand with money management is discipline, mastering your psyche, mastering your emotions, emotional control, and trader discipline. This is what I really like to focus on, and what I honestly think is the biggest thing that is lacking in the space for people to look to and start talking about. So, the Binance Launchpad and the way that they're doing these ICOs, and we talked about this extensively. You've got, CZ posted that image of, a fat cat trying to fit through the door because you've got, 35,000 people or 350,000 people. I can't remember the exact number off the top of my head, trying to purchase the latest seller ICO. It only some 3,500 or 35,000. I can't remember the exact number. Actually getting filled on their orders and being actually able to buy. And the reality is that I think, and I don't think I know, Phil C, thanks so much for the sub on YouTube, man. Welcome to the community, bro. Daz Dima, thanks so much for the follow on Twitch as well. What I know is that a lot of people are approaching trading in the wrong way. Again, when I talk about actual ROI or good returns on trading capital, most people don't like those answers because they look at this, they look at trading as a get-rich-quick scheme. Now, there are opportunities for establishing long-term investments in cryptocurrency, and Bitcoin is one of those few things that if you have the proper patience with your investment capital. So I think that, again, for me, what I try the same as what I've invested in Bitcoin. Okay, they're two different stacks, because you have to look at something like cryptocurrency as a long-term investment when it fits your needs. The problem with most people is that hodlers through the bear market did not do so well, and I think that's why a lot of people are turning to trading, because they're learning that this is a necessary part and aspect of how you should manage your position. Buy and hold is all well and good for some people, but in general, I don't think that it works that well. I think that people, and this is congruent with exactly what we talked about yesterday. The reason why buy and hold doesn't work for a lot of people is because you're always going to wait for that next level. You know, when something goes 10x, you're not going to take profit if you have the wrong mentality. You're going to say to yourself, "We just 10x'd, man. What happens if we 20x?" And what can solve this whole problem is if you scale out profits. Take some profit off the table. Thanks so much for this sub, Boris. Take some profit off the table and adjust your stop loss to break even. Make your trade a no-lose scenario when you are in profit, when you reach a certain determined profit level. Always take some profit off the table and adjust your stop loss. And I think that's just implementing that simple trick into your trading is going to turn a lot of your losses into winners. Remember, 4 things can happen when you enter into a position. You can have a big win, you can have a small win, you can have a big loss, or you can have a small loss. So if we just remove one of those things from the table, if we just remove big losses from the table, we have dramatically improved your trading ability over 75% of the other traders out there. Human drive and ambition is a good thing. It's what allows mankind to push forward, to manifest new technology, to manifest new implementations in society, to grow together. But the unhealthy aspect of ambition and drive is greed, and greed is not a good thing. The reason why is because it's not bad. It's not all ambition. See, a lot of people, especially in today's society, were taught that ambition is greed. That's not true. Especially with a lot of this like anti-capitalist sentiment. Drive and ambition is not synonymous with greed. Greed is an unhealthy manifestation. And the reason why greed is bad is because it impairs your disciplined thinking. It makes you take on bad positions. It makes you do bad things. It makes you do illogical things. In the realm of trading, again, it makes you put on bad positions and it forces you, it stops you from taking profit and managing risk effectively and appropriately. Greed can be the mind killer just as much as fear can. A lot of you guys know I'm a big fan of Dune. Fear is the mind killer. Greed can be the mind killer just as much as fear can. Greed can also be the pocketbook killer, to be quite honest with you. It will cause you to take more risk than you should, especially if you're falling into so let's say you put on a profitable trade and you had managed risk properly, you had position sized properly, you should be happy. But you're going to think to yourself, man, if I had just doubled up on that trade, look how much more money I would have. The problem with that is that you do not know in advance, because there is no such thing as a crystal ball. It doesn't matter what system you use. It doesn't matter if you've got 15 million computers running with neural networks and using predictive analytics. You're not going to be able to accurately predict the future. Now, you can put the strategic odds, the statistical odds on your side, which is what we aim to do with proper technical analysis. But the reality of the fact is that you're never going to be able to know if the trade that you entered into is going to hit your take profit target or if it's going to hit your stop loss. You know it's going to hit one of those levels. You don't know which one, and you don't know which one first. So falling into that, man, if I had just doubled up, I would have so much more money right now. You are technically correct. But since you never know the outcome of a trade, right? This is that element of defined chaos that we have to be comfortable with. Since you never know the outcome of a trade, doubling up your risk is also going to double up your losses. And as removed, thanks so much for the subscription, James. It is going to remove that key element that we talked about, removing big losses from your track record. Small losses are okay. Like, for example, like I just posted the last, if we go look at, let's do that. We haven't for a minute. Okay, so let me see if I can see if this is going to work. Okay, good. Nah, I don't want to do that. Okay, so what I'm going to have to do is this then. Let's try this. Window capture. There we go. Okay, so here is the live trades tracker that you get access to as a member of the premium trading group. So here's our results for March so far. 55.67% P&L in week 1, 93.94% in week 2, and currently 43.43% in week 3. We're about to close week 3 out. If you guys look closely here, and I actually have to adjust this because this is a profit, so that's 1.39. Actually, sorry about that, because that was a short. So if you guys look closely at this, you'll actually see that prior to this morning, the last 4 trades that I closed out were losses. But look at them. They're small losses. They're small losses, and I'm totally fine with that. And if you look at the wins, they're fairly big wins because we're looking to let our profits ride and let our profits run. So when you can... removing a loss from your track record, whether it's, and it's mostly big losses that I want you guys to remove from your track record because that's going to significantly impact your account. Small losses are okay. They're an inevitable part of trading because you don't know whether a trade is going to be successful when you enter into a position. The main purpose, the main point of risk management is making sure that your small losses do not turn into big losses, and that you are, and the point of taking profit and letting profits ride is allowing yourself to be open up to these big wins on things like BTT, on things like AGI, for example, on things like BCH, which is about to be. So keep that in mind, guys. Keep that in mind. Read that. Delete this. Okay. Joe Ryan, thanks so much for the sub on YouTube, man. Highly appreciated. Boris Friedman says, "Hey, hi Justin, good channel. Thank you so much, man. One of the better crypto TA YouTubers. Thank you. I appreciate that, man. Could you provide some advice on how to avoid revenge trading? Was long Bitcoin from 39.60, didn't take profit when I had the chance. Now eager to take the counter trend. Of course, I know better, so just sitting back and waiting for the next setup." That is absolutely correct, man. You definitely don't want to. You definitely don't want to do that, man. Like I just talked about earlier, somebody was like, "Hey, man, should we short Ethereum right now?" And I'm like, even to me, shorting Ethereum at this point in time seems attractive, but I have an attractive entry on Bitcoin. I have my stop loss set at break even, so I'm comfortable with that. You do generally in this situation want to wait for the next clear setup, whatever your strategy is. Now, if you're looking at the chart, let me address this. If you're looking at the chart right now and you're not sure exactly what you should do, then what you do need to work on is your entry and exit system, because your entry and exit system you need to have a fallback where you can just look at the chart and say, okay, am I going long or going short? This is why, again, I know a lot of people badmouth indicators, but having a good indicator strategy is going to remove a lot of the emotional subjectivity from entering into a trade. Once you have that good default fallback, indicator-driven database system, doesn't have to be indicators, it can be data, right? Open interest, volume, but you probably want to be more nerdy on your math if you're going to do that. And if certain levels, like for example, if volume does this and price moves this many percentages, and MDR is this level, and open interest is this level, you can totally trade based off a system like that doesn't even really look at a chart, right? And that's fine. I know some very profitable traders do that. The key thing here, the consistent thing between all profitable traders, myself and every other trader I know who actually makes money and gets the results that they want and is not in the 99%, is consistency. Consistency for entry and exit and money management, right? Obviously, trader psychology as well and emotional discipline. So, I mean, my advice for revenge trading is, listen, man, if you get burned, like, just step away from the chart. Step away from the chart. Go take a walk, go puff on your vape. Maybe I'm just biased for that. Just spend some time with your family, spend some time with your friends, and realize that there's always going to be another trade. Clear your head and come back when the charts and the indications are clear to you. A lot of things are going to help this out, man. Make sure that you're eating healthy. This is all blah, blah, blah stuff, but eating healthy, getting a good night of rest, exercising, those are all things that need to happen for me to be able to trade effectively. Like, nothing is like, I make the worst trades when I didn't sleep well, when I didn't eat right, when I haven't had a good workout for a few days, and I come down and I sit down at my desk and I work, because this is where I work, and I look at the charts and maybe I've had the mother of my child, like bugging me, and just stuff like that. All kinds of things can happen, man. So just approach the charts when you're ready, man. Be on, be on. When you sit down, it's trade time, man. Again, I only actively trade like for managing positions. It only takes me less than an hour a day. I know I have alerts set for the key areas that I'm interested in. When they happen, I take action if everything lines up, and I'm good to go, man. And the rest of my time is spent working on strategies, indicators, talking with the guys, which I've been, a little neglectful of the last week. But again, I've been moving, so I know you guys are very patient, understanding, and I appreciate that, man. We have the best community, dude. Like, I work with the best people in the premium trading group. Like, you guys are awesome. You guys genuinely contribute to the positive aspect of my life right now. I really didn't I knew it was going to be fun, but we've been doing this for 2 years, and the guys that we've gotten in over the last, year to 6 months, the best people that I've ever met, the best people. Yeah, and mostly shooting new videos and getting them ready. So I wanted to answer a question, man. Nick, yes. Sorry, I missed some of this stuff earlier. I saw it earlier. Let me get you, man. Here we go. Adam Collector Record says, is there a beginner's guide to ATR? I have a webinar that I talk about ATR in my premium webinars for subscribers. I'll make a video on ATR. Gypsy Hill says, I need to learn more about MDR. Do you have any videos explaining this? Bennett has some pretty good videos on MDR, some pretty good introductory videos. You guys can go check out his channel at Bitcoin Trading Challenge. You also can go check out the video that we've done 2 videos together now. You guys can go check that out in the Crypto Currently playlist on the YouTube channel. JT says, hello from Chi-Town. What's going on, brother? I feel you, man. Loving your channel. Do you have courses for true beginners? I don't have a full prepackaged perfect course that you can have now. We do have the premium trading group. I think it's going to be the best place to be if you're trying to learn how to trade, because I'm actively, like, the biggest 2 things that I'm working on right now after we get done with the move, which is almost done, is my indicators, which I've got 3 more. I've got strategies coming out for the time transformation in April, like pine testing, back testing strategies. The end of April, I have 3 other indicators that I'm working on, 3 indicators that are strategies. Like, time transformation is 5 things in one. It does reversals, it does trend, it does Fibonacci, it does divergence, it does unnatural volume. It does all those things. It does them all very beautifully. It's a fully comprehensive indicator. It's 5 in 1. The other 3 that I'm working on are the same thing. So 1 is compassion, I have fidelity, and then 1 accurately titled after my favorite Twitch streamer is Minx, because listening to her music gives me the breakthroughs necessary to design it. So shout out to Minx_ATL. Make sure you guys go check her out on the Twitch. But yes, that's what I'm actively working on right now, is compiling all my information. Like, right now we have premium webinars, which I think are going to be a great start for you, man. But yes, when I'm all done, what I will have is a course divided into 4 modules. Module 1 is going to be on money management, which I think is the best place to start. Module 2 is going to be on discipline and psychology. Module 3 is going to be on technical analysis, everything that you need to approach the charts and be a profitable trader and take module A is money management. Module B is psychology. Module B is entries and exits. And module D is going to be advanced price action analysis, which I don't think you want to start off with. And again, I know that a lot of people worship at the altar of price action, which is all well and good. But if you're a beginner trader, man, you run into problems. Yes, like in the USA, my good friend. Also, I live in the Midwest. Also, if I want to short BTC and crypto in USA, what exchange is the best? I would recommend Kraken. I know a lot of people are like hot to trot for this Bit7 thing where you can 100x, but I think that's going to probably end up like 1 broker. So be very careful about that, man. Moonshine Fuel, thank you so much, man. Highly appreciate that. XRP will take over Bitcoin. In Bizarro Land. Okay, we've got about 13 minutes. Let's see, did I talk about everything that I wanted to talk about? I guess okay. So a few more things about this. I just wanted to read these last bullet points on my thing, and if you guys go read my Binance Launchpad psychology article, I think it'll be helpful. But just keep in mind, man, this game of trading is the long game. All right, this game is about retiring at an earlier age, not about getting rich and living the life of your dreams now. Which can, I mean, it happens. Okay, it does happen. It happens if you make the right investment at the right time, but for 99% of people, that's not going to happen. Okay, for 99% of people, it's not going to happen. For the 1% out there who are the Batmans and the Elon Musks, you know, I mean, shout out to you, man. And this channel is I'd love to have you on the channel. You're Batman. If you're the Batman of crypto trading, if you are the Elon Musk of crypto trading, come on, man. But for the rest of us mere mortals, for the 99%. So this is different from the 1% of profitable traders and the 99% of unprofitable traders. It's not quite like that. It's different 1 in 99%. Sorry. For the great majority, for just about everybody, dude, that get rich quick mentality. So for just about everybody, is going to get you washed out of the market real quick, man. That's why so many people lose money, because this game requires patience and discipline. So focus on consistent gains over time and honing your strategy to a razor's edge, not on this or that pump, not on this or that price movement. This or that price movement, and one individual trade, like you'll see this all the time on crypto Twitter. Man, look at this huge ROE on this trade, man. I'm gonna take a screenshot of my stuff. Often they don't post up how much margin they're using, but look at that 600% ROE. All right, you know, with 0.01 BTC in margin, but doesn't matter. They put that up, right? And that doesn't matter, man. That doesn't make him a good trader. It's a statistical anomaly. Now, if they're doing that day in and day out and day in and day out, then I'm probably gonna, you know, like wiretap them because I'd like to get access to their strategy. But the point is, what matters over time is consistent results over time. One trade doesn't make you a good trader. One trade doesn't make you a bad trader. That's why, you know, one win and one loss doesn't matter. You want to analyze your portfolio at the end of the year. So that's what matters. Consistent gains over time over catching one individual price movement. ETH can't even handle CryptoKitties. Nick M. Yes, it is Kraken with a K. Kraken. And on that first question, I plead the fifth. Let's see here. Can I? Well, that's a lot of questions. Shyless Yadev, hey, what's going on? Can you tell us more about the Fisher transform? Yes, it is the best indicator that has ever been created, ever, in my humble opinion. Period. Period. No, I hate that stuff. I got that from old Molyneux. He's like, anybody that's not, period is not an argument. Yeah, and again, I have multiple webinars. I cover the Fisher and my modification of it, time transformation, heavily in the premium webinars. BAT coming back strong. That's good, because I have a bag of BAT. Go baby. It's your birthday. Go baby. Sell signal on the 8-hour time transformation right here at the top. Buy signal on the bottom. Fairly weak volume. I really like to take those counter trend trades after there's been a huge surge of volume. Not sure how much follow through this thing will have, man. But BAT's been on a nice tear, man. Been on a nice tear. I like this. I don't really like it right now, but in general, I like it. It's going to follow the rest of the markets. I know a lot of people were... Oh, IOTA's doing some good things. Didn't quite make it back up to the previous high. Just about the equidistant. What was the high on this candle? 7776, 7784. So not quite able to make that high. Yeah, which makes sense. Let's see if it closes above 75.97. Pretty good volume on the last two 8 hours there. Yeah, I like to see this volume and volatility. That's a good one right there. There's nothing I can do with this thing right now. Let's go through the important ones. Let's look at what I'll be looking at today, guys. ZERP could be a long, but nah, man. You know, I should have been short on ZERP, you know, quite a while ago. I mean, this thing is just... I mean, we took a couple ZERP short trades, but we should have been in the longer term trade. Been focused on other things, but yeah, this is a good one. You can see my setup right here. Yeah, I mean, I'd like to say that this thing, you know, I'd like to see this thing come back up to my entry, but doesn't look like it's probably going to do that. That's H19. We're going to have to focus on M19. Yeah. There's, if you want to be risky, you might be able to take that for a long, but I think these things are going to have follow through, man. LTC, you can see where we entered. Here was our entry zone in the trading group. Looking pretty darn goodly right now. That's a long hold right there, boys. Everybody's hot to trot for Cardano. Let's see if this actually activates. It needs to close inside this box. It needs to close inside the box to reactivate this trade. This was our last trade. Hit take profit 1, stop that at break even. If we close back inside this box, we'll be short again to the downside. EOS, I think, is probably a pretty strong short. I think I was just looking at that, the spot price. Looking at it on BitMEX, looks like we might be getting a reversal here at some point. Man, look at that. That is strong downside. Oh, baby, baby. Yeah, we plotted out this rejection level right here and 3 take profit levels to the downside. Yeah, EOS M19 continue to drop. I wouldn't be trading on the H19 contracts, by the way, guys. I'd be on the I would be on the M19s, or moving over to the M19s, unless you have a strategy that takes advantage of the, unless you're playing the notional basis, which a lot of traders are going to as well, at least the whales, larger traders. Let's go look at my Euro Pound trade. Looking pretty good. Let's look at the Kiwi dollar. Nah. We've got about an hour and a half before I would look at these charts to make a trade, but just for fun. The Aussie dollar doing. Pretty volatile day in the FX markets, man. Heck yeah, dude. It's worldwide, baby. It's worldwide. Martin 958. I am of the strong opinion that we're going to go down to 35, 3600. The bot army being reprogged. Oh yeah, Pablo. Let's check out that ZERP. Let's check out that ZERP oozed for you, man. I saw that in there. Let's finish the show with ZERP oozed. That's a good one. On Finex, bro, or Kraken. Let me know, man. But I'll take a look at ZERP oozed. All right, so here, I mean, just looking at this thing, here's the first thing that points out to me. I know that a lot of traders are going to try and trade this trend line, right? I know that a lot of traders are going to try and trade this trend line. So you're going to have a lot of people trying to go long. And again, it doesn't matter how you draw it because it's subjective, but you know, roughly in this vicinity, they're like, look, bro, this is a liquidity grab, just like this, this, and this. I mean, so I can see it on the table, man. Honestly, I think this probably has more continuation to the downside because look at this level of consolidation that we've had here, you know? And again, you guys know how I feel about chart patterns, but I mean, the main point here is, you know, you could look at this as an ascending triangle breaking to the downside. Again, I've talked about this level for a while. I said if we get back up above 33, I think we'll probably go to 37. But being as it looks like we're going the opposite direction, let's see what the weekly is telling me. Okay, the weekly doesn't look too terrible, man. But again, that's basically giving you The weekly as well is just kind of giving you this symmetrical consolidation, right? Symmetrical consolidation is generally a continuation of the previous dominant trend, which I would assume to be to the downside. We've had we've had a bunch of weeks of higher lows on ZERP USD. So yeah, I mean, I'm kind of excited about a trade to the upside. Honestly, well, no, that's not quite right. Actually, I talked about the ZERP BTC pairing. I'm actually looking for it to break the gap and take it down to 7,000 sats. So be that as it may, I can't really be looking for a bullish trade, but that could just be my bias, so I'm well aware of that. This isn't going to be very helpful. We've been swinging a lot, but looking at the weekly, we are closing above the zero line. But you see that little tick right there? That means that we're trying to cross over. So, I mean, we're basically just looking for anything. I'd say on a higher time frame, we're looking to get down below 28 cents, 29 cents, since that's so close to 28. I think if that breaks, we've already grabbed this liquidity. You only have like one option on the table. Either we grab liquidity right here directly below 26 cents, or we're just free falling, man. But I don't see, listen, when something's going like this, I'm not getting a weekly bullish crossover as I got here and here. It's going to be very hard for me to take this as a continuation trade. Now, I will say that, again, if price gets back up to 33 cents, I will probably look to take somewhat of a breakout trade, especially if we get confirmation on the higher time frames. Right now, this looks really bad to me, man. This looks really bad. It looks like it could be good. It looks like it wants to be good, but I don't have any indications to trade this. Time transformation's kind of being a little whack noodle on this one as well. Consolidating above the zero line right here, but not putting any really strong bullish movements here on the daily. And I'm going to be trading on the 8 hour. Yeah, 8 hours just been killing. Except for, okay, here's one bad trade. There's one bad trade. But good trade, good trade, good trade, good trade, good trade. Okay, look, man, here's what I do. And I'm not recommending you enter into a position. With ZERP, I'd probably want to do nothing. Okay, we did draw that on the daily. So let's play this on the daily. Okay, you do got this. You got this ascending trend line somewhat, okay, on the daily, I guess. So a lot of traders are going to look at this and they're going to be like, well, if you close below the trend line, then you're short, and blah, 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 whatever. That shit's bullshit. If you want to go long, man, I would just manage risk appropriately, dude. Long stop loss at 30.5 cents. So 30.5 cents is going to be your stop loss if you have some indication to go long. Again, I don't see any indication to go long, except if you're just trying to aggressively counter trend trade. You could say all this liquidity has already been grabbed, so this is but here's the thing. If this liquidity got grabbed, returns to this level if price is bullish, this shouldn't happen. Price should genuinely be bearish. I mean, you're going to obviously probably get a little bit of upthrust, maybe up here to about 31.9, just based on the momentum of this down move. So price does have to move up so it can move down a little bit. I'd be looking at this area to short from, man. Around 31.9, 32 cents. So this previous liquidity zone right here, I'd be looking at that area to potentially short from, or waiting for an indication from my strategy. ATR is real low, man. So like I said, this kind of looks like it wants to do something, but I don't know. This particular asset, this particular chart on Bitfinex, I don't really want to do anything. ZERP BTC, I want to short. ZERP H19 doesn't look like any signs of turning around. You don't want to be the fool that calls the bottom in a bear market. You don't want to be the fool that calls the top in a bull market, dude, because 99% of the time you're going to be wrong. So I'd keep it very simple, man. If we break 32, 33 cents, then we go to 37, I think, most likely. Or at least we have the ability to go to 37. Again, you're going to take profit at your ATR level. For the moment, I think this looks like a short, but I don't know if I'd want to enter now on this high volatility and high momentum. But again, if we do go down to 29 cents, we go down to 29 cents, then that looks like crap. And if we look at the volume, I mean, just to be realistic, man, this does look like breakdown. You have a level of consolidation, and you have a movement on high volume and a fairly convincing candle body close outside of that range consolidation. Classically, that means we're going to see continuation in that direction. Where would we likely go? Well, I don't think there's going to be liquidity here. There's probably going to be a little bit of liquidity, again, down here at around 29 cents and maybe 28.5 cents. So if you're looking to short from here, those wouldn't be bad targets. But I would wait for that pop back up to about 31.9, maybe 32 to look for an entry. Because if price goes significantly above that level, and if price goes above If price goes above this open, then price is not necessarily bearish, and we're just back in consolidation. Again, kind of that same thing. I feel the same way about this as I feel about Bitcoin. 70% chance this pops up a little bit and then continues on to the downside. 30% chance that we just continue consolidating, and this was it for a while. Hey, thanks, James. I appreciate that, bro. Yeah, I agree with you, Vitam, for sure, man. Vitam, you trade FX, dude. If you do, man, hit me up in the Discord, bro. OMG rigged for sure. Thanks so much for the follow on Twitch, man. Highly appreciate that. All right, guys. With that being said, we're gonna have to wrap it up. Let's go over here and make sure I thank any late subscribers. Joe Ryan and James Gerard and Boris Fridman, Phil C, Jay Mercy, Catalia Full. And Marlon Jones, Bulls on the Block. Guys, thank you so much. Highly appreciate that, man. Marlon Jones, again, thank you so much for your $2 donation. Very generous donation. Highly appreciate that, my good friend. You guys are good people. I highly enjoy, appreciate, and I highly enjoy spending my time with you. That's about it, though, guys. We're going to wrap it up. Just all the regular stuff, guys. Make sure to hit that notification bell if you don't want to miss an episode. Head on over to twitch.tv/crackingcrypto. Give us a follow or a sub. We appreciate the love, man. And most importantly, come into the Discord, discord.crackingcryptocurrency.com, and keep the conversation going, guys. You can chat with me. You can see the other signals and trade setups from the analysts. We post free signals. It's just a good community, guys. We got tons of resources, man. I'd love to see you guys in there. If you guys want to trade along with us and get access to all my indicators and strategies, trade setups, and have first crack at my course, premium.crackingcryptocurrency.com. I'd love to trade more closely with you guys. That's about it. Make sure you guys go check out the new stuff on the blog, crackingcryptocurrency.com/blog. And also, we are still doing that coin giveaway. So freemmo.crackingcryptocurrency.com. If you have any questions, comments, thoughts, sarcastic remarks, or death threats, leave them in the comments section down below or post them in the Discord, man. It's all good to go. Leave those death threats over on Sunday Decrease channel, though. Moving on. If you guys... I got to come up with a good question of the day. Good question of the day, guys. What do you think is going to happen, guys? We talked about that 30% chance, 70% follow through to the downside, 30% continued consolidation. What are your guys' thoughts and opinions? Please leave them in the comment section. I know that you can't leave them right now, but if you're just patient and wait like 1 minute after I end the stream, you can leave your comment. I will leave one random commenter a random crypto tip in the Discord. So if you post your comment, post your Discord ID along with it, so I can get you guys, in there, man. Murray Baker, thanks so much for the sub on YouTube, guys. You guys are fantastic and awesome. That's about it, guys. I hope today's show has helped crack cryptocurrency for you. And until tomorrow, guys, as always, trade safely. Peace out. up.